it's a good time to get in some market opinion. So let's invite Rohit Srivastava, the founder and strategist at indiacharts.com. He's with us in the studio. And what a day to have this conversation, Rohit. Thank you so much for joining in. It's a sharp fall that we are seeing today. First up, what are your thoughts on the markets now? You think this could continue and December would not be the cheerful month for markets as you usually see?
So I do think that there's a lot more downside in the months ahead. But if I actually focus only on December, we can still have things go both ways because, today after this sell-off, we are at a critical support that's around, 23,184, I think around the 24,184, around the 20-day moving average. One of the indicators, one of our proprietary indicators known as the momentum swing is reading in at around 6. Now, what that really means is that there are only 6% of stocks with positive momentum in the market. So when you have such a low reading, the first thought is it going to bounce back now from here? Okay, so 24,184, we will look for some kind of a bounce. But will the bounce be meaningful enough or significant enough? Will it take us back to 25,000? That is a big question mark, right? So the next bounce is where we would sell. If somebody is looking at selling here, we would say probably wait for a bounce and let's get a better price. But overall, on a 2-month, 3-month basis, I think the markets are going to remain weak. No matter how much we bounce up, there's going to be selling pressure again, and it's likely to become a little more global. So these are the things to keep in mind.
Okay. And why do you think the selling pressure will continue or perhaps get worse over the next 2 to 3 months? What are you reading on the global charts as well? As you said, it's going to be maybe top down in a way from global led.
Yeah, so this time, interestingly, the Indian market topped out, I think, well ahead of global markets. So I do think that the October top at 26,300 almost, I think 277, that's the exact number, is where we've fallen from there, in what we call as an impulsive decline. Now, when we say impulsive, it simply means that you will not make a new high. You will probably see retracements. And that happens when a lot of sentiment reaches an extreme. Everybody turns bullish, everybody's a buyer, and then things turn from there. I mention this because the US market over the last 2 weeks has now those kind of readings. Like I have received, a dozen or 2 dozen charts from various, authors showing that sentiment in terms of the number of people who are invested, the amount of cash with retail investors, etc. Various such numbers have all, reached levels which are way above historical peaks. So that means everybody is all in invested. Now, if you just look at the last 1 week, we saw the Dow Jones fall for 6 to 7 consecutive days. The Nasdaq was still making a new high till yesterday. So it's a bit early to say whether the Nasdaq is also done and going to join in. But I think the sentiment data is telling us that everybody has become over-optimistic post the US election and the rate cuts that started. And that over-optimism now needs to cool off, and which is why I think going into the new year, very similar to what we saw in 2022, you often get a peak just around the December-January period, which is the year end, where a lot of, extra cash gets allocated into funds, and then you start the new year, on a clean book, and then it sells off. I think that's the setup we are really seeing. And that's why I think the global market may also surprise us on the downside. And our market has already been weak, and which is why every bounce, any negative comes in, it sells off much harder. You can see that in individual stocks as well. In fact, one stock which probably I highlighted some time back also on the show is Reliance Industries, right? So Reliance Industries had one of the largest short positions when we discussed it 2 weeks ago. And yesterday, after its recent bounce, where it couldn't even get past, say, the 40-day average, it has fallen, and yesterday on the close, the short position was at again a new high. And I'm saying short, which is an interpretation because we don't get the long short breakup. But the interpretation is based on the open interest rising when prices are falling. So when prices are falling and OI is rising, we are interpreting that, okay, the OI is essentially building up shorts. And yesterday, the OI hit a new all-time, I wouldn't say all-time, but the highest since 2006. So that's like almost... how many years? 18 years or something like that. And 2006 is when you got that big crash in May of 2006 when markets fell 30%. So that's the last time RIL had a big short position. Then, of course, it did bottom out and reverse. But yesterday, we didn't see that happen. We haven't seen the OI come down. And that's when you would say, okay, shorts are starting to get covered. You probably need some good news around Reliance for that to happen. So if that happens, that could be a trigger for a bounce. But right now, it hasn't really shown up.
Yeah, their O2C business has been seeing some weakness, and that's like the majority part in terms of, it's the cash cow of the business as well. But you said that barring December, things are not looking so good for the market. So which are some of the sectors which would contribute to that fall that you're expecting in the markets to continue?
So this has been pretty broad-based. I think the places where there was some hope, one was banking. Especially private banks, because they'd become extremely undervalued. And the second has been the IT sector, again on the back of the US market. So which is why that will still remain a watch point, because the Nasdaq, while it was down yesterday, has still not given a clear trend reversal like the Dow or S&P. So can we still have some upside on the back of IT? Question mark. That may be a possible safe space. But apart from that, most other sectors we are not seeing significant retracements or new highs, and I think wherever bounces have happened, they are getting sold into. So we don't really see strength in general. I think the one index which really stood out has been the small cap index, right, which actually closed at an all-time high right away. But last 2 days of selling almost makes it look like maybe it's done. I'll still, again, small cap index, I'll again give it room next week and see that it can make one more move to the upside. But we are late in this rally now, as far as the small cap index is concerned. In fact, I can make a comparison with what happened in 2021. The Nifty topped out in end of October 2021, and 22 January, the small cap index made a new all-time high, and the Nifty did not. Same thing we are seeing here. Only you shift the time frame 1 month behind. That this time we topped out end of September, and in December we are seeing an all-time high with the small cap index. So I think, if that is the same divergence and it remains, you don't see a new high in Nifty with the new high in small caps. Usually this kind of an intermarket divergence is technically seen as a negative. And then it eventually plays out in a trend reversal to the downside.
Okay. Rohit, just one final question then. You were telling me in the break that you've been negative on the market since October. Now, the sell-off started because of, fundamental reason, the corporate earnings not being up to expectations, government capex. Technically, what is it that you saw in October that made you so bearish on the market? And how this call that you're taking, that things are going to remain weak, is this safe for the next 2 to 3 months, January, February, March? Will budget? I mean, give us some time horizon.
Yeah. So up to March is the easy call. Okay, that, the setup is there that we head down to March, probably retest previous lows, 22,000, 21,000 maybe. And what we saw in October is the end of, one extreme in terms of sentiment. What I would look there is...
impulse sentiment.
Not only that. So when we measure sentiment, we like to look at data also. So if you look at FIA positioning in the index futures, it had reached near all-time highs, or as high as last time in 2016, which is around demonetization. Right, so that's again a long period. After 9 years, you had the highest long position held by FIs in index futures, and that's a sign that excessive bullishness had come into the market, and that was one of the signatures. So when we got a technical sell signal, and we look at that data point, then we say, yeah, this probably needs to go down a lot more to unwind all that position that got built up.
Okay, all right. Take that point, Rohit. Thank you so much for stopping by on a day where we are seeing those massive cuts in the markets. Friday the 13th, that seems to be working out. Thank you for your thoughts today. Well, with that, we'll do one thing. We'll slip into a short break. Morgan Stanley and Jefferies, the two brokerage houses, have come out with their India strategies for 2025. We'll put the spotlight on that on the other side.